I'm going to share with you my weekly watch list as a professional trader. We're going to be looking at trade ideas, but I don't want you to necessarily think about, oh, he's going to get long here, let me buy. I want you to pay attention to why I'm getting long, why I might get short, how I will add into a position, when will I move my stop up for trade management. This is what I want you to pay attention to, how my brain operates as a professional trader. I've been trading for over 10 years, helping traders become consistently profitable, and this is what I do every single day. We're going to be looking at the stock market, crypto, gold, currencies, and a lot more. Okay, so let's get started. I appreciate if you guys like the video, subscribe, and if you have any questions, let me know in the comments below. Let's get into this. So the first thing I always do is I have a look at what news is coming out for the day. But in this case, we're going to have a look at what news is coming out for the week because this is a weekly watch list. Now, Thursday and Friday, markets are going to be closed. Markets are going to be closed early. So I'm not going to be trading, nor do I recommend trading Thursday, Friday. It's American Thanksgiving. So avoid those 2 days. It's a good time to get away from the charts. Maybe do a review if you choose to, maybe do some back testing. I don't really recommend trading those times. This week in general, there's not a lot of news going to be coming out. So I'm preparing for more of a slower week, choppiness type of week. You got to be careful because a lot of traders lose a lot of money because it's hard to really dictate where the market's moving this week because it's just chopping, going back and forth. So a lot of people get whipsawed out during weeks like this. So when I look at this for the today, Monday, or the rest of the week, there's really not much news coming out, so I'm preparing for a slower week. I might need to manage my risk differently, but also manage my trade, not thinking prices are going to go for 5 to 1s or 3 to 1s. Quicker take profits, see money, take money type of week. That's what I'm thinking, okay? I have a look at what news is coming out for the day, but also for the week. Not only that, earnings coming out this week. There's no major earnings going to be coming out. This is really important. Last week it was like Chipotle and Nvidia coming out with earnings. This week there's no real earnings coming out. I think the major ones is Abercrombie and Dell Technologies. Nobody cares about these stocks. Dell, I believe, actually got removed from the Dow 30 earlier this year. So yeah, there's no actual earnings going to be really coming out this week. So that's why I'm preparing for a choppier week. Let's get into the markets now. So when I first look at the S&P, this is how my brain is thinking. I'm going to be looking at maybe the 4-hour time frame. We're going to be looking at, swing trading, day trading, and that type of stuff. So we're going to have a general outlook, but I'm going to dive down into smaller charts. So the first thing that we're going to be looking at is the S&P, and we'll have a look at the other markets as well, look at commodities, crypto, and currencies. So my plan right here, right now is overall, I'm a bull when it comes to stocks. Okay, the thing only goes up. Why would you sit here and swing short the stock market when it just technically, fundamentally, it has to go up? It's rigged to go up. Okay, there's a lot more bullish days. It's easier to make money being a bull than it is being a bear. So already I am a bull. Not only that, it's been going up over the last week, so I want to be looking for buying opportunities ideally. Now, there are certain key areas that I do need to be aware of, and there's a buy setup that I do like, but we will talk about that in a minute. When I first come to this chart, the only thing that I'm really going to be noteworthy of is previous all-time highs. That's the key area of resistance that's going to be on my charts, okay? Aside from that, I think we have an area of 4-hour supply that sellers might be coming into the markets. But like I said before, I'm not a big fan of selling. I would much rather be trying to buy this market. And so the buy setup that I'm kind of looking at and I'm targeting this week for right now early on, if prices come down, is if prices pull back into this kind of 15-minute little rally-based rally demand zone. This is also going to be a support line. This is also going to be a breakout retest. This is going to be demand. So if prices ever do pull back down into this area, I like it for a long opportunity. Now, if you don't want to be in a position on something like this, if I was not okay with being in a trade for a couple hours or a couple days, then what I would do is I would then wait for 1 minute or 5-minute confirmation, meaning once prices come in, I would then wait for the buyers to step in with confirmation, and then I would enter my long position. Okay, but this was a long that I'm kind of looking at as long as the other criteria meets for me getting long. But how am I going to manage this trade and where am I going to place my stop? Let's have a look on a 5 minute. So if prices come back down, my stop, there's a couple locations. I would not, let me say this, the first aggressive stop will be down in this area, kind of below this structured rally-based rally breakout level. The first stop idea might be down in this location, right below this area over here. Okay, that would be deemed the aggressive type of stop loss. The little bit more conservative, what I would say, is below this area, which is below this overall pivot point. That's the second stop loss that I would probably lean towards. Now, the third and the most conservative stop loss, if you want to play a high probability based game, right, lower risk to reward, but a higher win rate, then you're probably going to be looking at a stop loss down in here below previous day's lows and overall structure. So in order for you to really get stopped out, if I had a stop down there, I would need prices to go all the way down there. Okay, I think any of those stops, depending on the type of trader, is valid if you were to buy the setup straight up there. Or, like I said before, waiting for prices to turn with confirmation once prices come back into this area for buying opportunities. I would then look for 1 minute time frame confirmation and have a more tighter stop loss. Okay. Now, if prices if they start going in my direction, I'm not going to keep my stop down here. Like, let's say, for example, this was my stop. Okay. If prices start going up into here and they start rallying up in my favor, I'm not just going to hold my stop loss. I'm going to move it up. I want to protect myself, because if I notice prices fail to break the highs and start going lower now, this is not something I really want to be long in. And that's a big mistake that I see a lot of traders making. They take full losses. And if you ever look at a profitable trader losing trades, right, you're going to notice a lot of them are not full losses. In fact, for me, it's like 50% of my trades, 1/3 of my trades are a full loss on my original stop loss. A lot of the time I'm taking half risk, break even, 1/3 risk because I manage the trade. Okay, versus another trader, they just take full loss after full loss after full loss, right? So you need to learn how to manage your trade. And so that's what I would be doing once prices start moving in my direction. But if it fails to do so, I'm going to cut my losers early and get out of the trade. I can always get back in, because if prices fail to break the lows, or sorry, if they do break the lows, I could still get back in if it shows me buying confirmation. And if I want to re-enter this, I can always still get back in, right? And if I still hit a 1-to-1 take profit, well, then I only lost 1/3 of my position. And if I win on my second, then I'm still up money, right? So trade management is key to being a profitable trader. Okay, so that is kind of what I'm targeting here. And ideally, this is a big gap opening over the weekend. I want to see this thing reverse. I think it will reverse, but if it doesn't and it continues just to rally up and I find some good buying opportunities throughout the week, then I'm probably just going to continue to look for buying opportunities from there if it doesn't pull back. Now, this is going to remain the same thought process for the NASDAQ as well, because the NASDAQ has the exact same level of the breakout here with the same structured levels, which I said, you know, down here or down here or down here, right? Same type of levels. I would maybe consider buying it straight up or waiting for confirmation. I think either or is fine. But if prices continue to rally up, then I'm just going to be looking for buying opportunities throughout the week, right? I really don't want to be selling this market until prices really start breaking these structured areas of support and demand. And if you even look here on the NASDAQ, like, this is a level that we've talked about before. This supply zone is held 3-4 times, but it's gone deeper each time. And so now the fact that this buying setup is going to react as a breakout retest area for those buyers to step back into the market with no real sellers stepping in previously here before. So that's why I like looking for longs for the week, okay? With, of course, noting previous all-time highs areas up in here, okay? Same thing for the NASDAQ, okay? Let's have a look at gold. Actually, really quickly, let's have a look at the Russell, because I know some people look at the Russell. The one thing I would keep an eye out on the Russell is we are nearing all-time highs, which have been previously up in here back in 2021. I like it for longs, but this is an area that we've talked about in previous weeks where you might see sellers trying to step in. okay? Previous monthly all-time highs, yearly, it's like all-time high supply resistance, so it's a very important level for people to note if you trade the Russell. I like it for longs, but like I said, I don't like this one as much until prices start breaking above, okay? Let's go to gold. Gold, prior to me hitting record, I was going to be very bullish, okay? Now, the reason I say that, gold is up 35% for the year. Why are we trying to swing short gold? It doesn't make any sense to me. Don't be the idiot trying to swing short a market that's up 35% that just looks like this going to the upside. I think it's a good way to lose money if you ask me, okay? That's why if I'm shorting, I'm in and out of my positions very, very quickly, okay? Gold, up over 35% for the year. It's in an uptrend. I want to be looking for buying opportunities. If I do decide to sell, it's very quick. Shorts on a 1 minute, maximum 5 minute time frame with smaller risk because it's a lot more aggressive than looking for buying opportunities. Now, going into this week, I want you to note something. The markets have been very tough to trade over the last 2 weeks because, you know, we've had this whole election move. We should be looking at the S&P, but the whole election move was rallying to the upside, and then the next week we crashed to the downside, and then last week we had a move to the upside. It's been very tough for traders to be trading these markets recently, especially in the stock market, because prior we were just screaming to the upside, and then we were screaming to the downside the week after election week, and now this week we were rallying to the upside. So it's a very tough week, but it's important that you find yourself on the right side of the market. Now on gold, what I want to bring your attention to is going into this week, I'm thinking, hey, if I look at the overall sessions, as in the London session, the Asian session, the New York session, out of the last 20 sessions for the week, all right, there's 3 sessions a day. Over the last 20 sessions, 17 of them have been bullish, right? I would much rather be bullish, right, knowing this, that the last 20 sessions, 17 of them have been bullish. Like we've been closing bullish over the London, over the Asian, over the New York during those last 20 sessions, over the last 17. So I want to be looking for buying opportunities, right? So prior to me looking for buying opportunities, prior to me pushing record, this is where prices were pulling back into over here. This is where gold was. And I was like, hey, I actually really like it for buying opportunities. I just don't see any confirmation yet. We actually went down to a smaller time frame and there was no confirmation. Like we broke downward structure as in broken downward momentum line, but like we never removed structure. I don't see any confirmation. What I want to see is lower low, lower highs being taken out, right? I want to see higher highs being created. I don't see any of that. I just see a momentum line being broken. We haven't removed an actual pivot point, right? So I like looking for longs, but we never did get that. Now, I want to bring your attention to what's been happening over the last couple hours because this is important to note. The last 20 sessions, 17 have been bull. But during this Asian session, we have removed not just 1, 2, 3, 4, 5 session lows over the course of one Asian session. That is major selling coming in the gold market. Now, yes, I would like to remain bullish on something like this if I can find a buying opportunity on a smaller time frame, okay? But I will also consider looking for selling opportunities if prices pull back into a 15-minute/30-minute supply zone up in here. Because this was a lot of selling coming in. Like, look, I want you to understand this. What did the zone accomplish, right? Why are we looking for buys or sells? What did these areas accomplish in its career of price being on the chart, whatever you want to call it, these candlesticks? What did these candlesticks accomplish? That's the question that you should constantly be asking yourself, all right? So this is a very strong move to the downside that's taken out 5 session lows. That's a pretty major level. Now, do I want to be short this thing for the next day? Probably not, right? But I will look for selling opportunities for, a couple hours to an hour if prices return back up into here. I will look for 1 minute time frame confirmation shorts up in there, right? That's what I'll be doing. Now, I will still be looking for buying opportunities, but as of this moment, I don't see anything. Right now, we've gone down. We've just kind of range bound right here over the last couple hours. So I'll have to check back on something like this. But if a buy setup occurs, maybe I'll consider looking at that. But it's a little tough market to trade right now because we've had this recent sell-off. But I do like it for selling opportunities, only up in that general location. I'll look maybe for aggressive sell setups if we continue to break for another 2 or 3 trading sessions. Like, so if we have two to three trading sessions of it selling off, that's when I'll consider looking for selling opportunities, right? But I got to be careful because I don't want to just keep trying to buy this thing as it's falling, right? I don't want to do that. So I really got to pick my spots wisely and manage risk if I plan on buying this thing. Okay, that's kind of my outlook on the gold market. I want to have a look at the crypto market because crypto right now is nearing $100,000. The live streamers are going crazy, pump and dumping the meme coins. All right, just a chill dude. What's a couple other ones? Rismas is what a couple other meme coins are. It's Christmas, but Rismas. You have Riz Giving, the Riz Giving coin. Don't talk to me. When crypto just moons up over 30% over the course of a month, every crypto goes up. It's impossible to lose money, right? So you get a bunch of new traders, people making money. As soon as this thing sells off, that's when a lot of people will lose money. It's a bunch of degen traders trading meme coins. But long term, very bullish Bitcoin. I love it. Everything about it, I love it. I think it's great. But over the last, meme coins have been going off crazy on social media, if you guys haven't noticed. But my outlook in Bitcoin prior to this week was, I think if we hit 100,000, I think we go up to 110. But if we miss 100,000, I think we drop down to 90,000. That was my outlook for the week because everyone is talking about Bitcoin 100K, 100K. It's either just going to miss Bitcoin 100K or it's going to smash through it and go up to like 110, right? We did just miss it. We got up to 99,700, 99,800. So we missed it by like $200. But we've sold off back down to $95,000. So we've had about a $5,000 fold since the all-time highs. So I'm going to remain bullish, but I want to pay a little close attention to like a 30-minute time frame about what I see. I see this thing going up, bull, 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 looking for buys. Great buying opportunities, just phenomenal buying opportunities, buying these breakout retests of prices creating new highs. Like, why are we trying to sell this thing? Doesn't make any sense to me. Okay, now the area that I would be looking for, because I don't want to talk about old zones. I want to talk about what's happening right now. What is happening in my brain? I would much rather be a bull. And right now, I see this market selling off lower lows, lower highs. This is a location on my chart that I would see a lot of people looking at selling opportunities, and I think that's fine. I think that is fine for very quick shorts. Would I sell this thing thinking it's going to go down to like 90,000 or 75,000? No, right? I think you could capture some really quick 1 minute shorts, but it's not something I would hold for days. Okay. But the way that I'm looking at this now is I think we might have a failed break. Not a failed break, like a failed downtrend. And so we're actually going to get a break potentially to the upside. Like, so right now we've gone up, higher high, higher low, right? And now we've had lower lows, lower highs. And so if we fail to break, if we fail to hold this downward trend line, this downward momentum, well, then we're going to get a pop to the upside where we're breaking structure, right? And so what I'd be looking for at this point is kind of a breakout retest of this channel being broken. That's how I would be playing this market. And so if we get a rally up to here, I like that as a pullback back into that area, and then either looking for longs on a smaller time frame or buying it straight up, looking for it to go back up to 100K territory, right? And so that's kind of the game that I would be playing. And this chart has shown so many buy setups like that over the course of the last month. Like, the way that I'd play this is if that happens, there's 2 stop losses. Either one right there, I would play the stop either one right there, or I would have the stop down here and play the safe game of $95,000. And then if you play that, you're playing the break that it's going to hit 100K, right? So if we got a break, those are the two stop losses I would consider, depending on the type of trader, trading it straight up, or you could wait for new confirmation and then trade it on a smaller time frame and just have a tighter stop down in these lows or those lows, right? And so it's the same time frame sequence, just different. I mean, it's the same setup, but just different time frame sequences, right? Depending on the type of trader you are. If you're scalping or day trading or, swing trading, you know what I mean? But if this thing starts rallying up, all right, if it starts rallying up from there, and it doesn't matter if this is Bitcoin, if the stock market or other things, let's talk about adding into my position. If I'm right and prices start going up, I'm trying to add into my winning position and manage my risk. So at that time, as it's going up, I'm going to try moving my stop up so I take a small loss if it reverses, right? While trying to add on these pullbacks that I can get into new areas of pivot points, right? That's how I would be playing this type of market, adding into my winners, right? While moving my stop up. And so if I lose, then, well, do I really see this happening of it crashing and breaking to the downside, right? That's where you should be placing your stop. You should never be placing your stop based off of a monetary value of dollar sign. You should be placing your stop of where your trade is no longer valid, right? When is your trade declared invalid and you're accepting that you're wrong and that you think prices are going to continue to go lower? It should never be a monetary value of a dollar figure, okay? So that's how I would be managing my position on something like that, trying to add into it while moving my stop up. Or if you decide not to add into it, I would be cranking my stop up, because you don't want to have this thing go in your favor and then start reversing and it's telling you it's no longer bullish. Because if it's failing to break highs, like if we get this move to the upside, it doesn't matter if this is crypto, it's the same thing in your trade, right? If it fails to break the previous highs that it previously went up to, like if it goes up to here, we get long, and it goes up to here, this doesn't really tell me that I want to be long if it's failing to break the previous highs that it went up to, right? So that's when I'm cranking my stop up, and I'll say, hey, you know what? I can always get long again, right? If it goes in my favor, I can always decide to get long again. But if this thing's failing to break new highs and it's going lower, why am I getting long, right? Profitable traders are not taking full losses every single trade, right? They may take a full loss 1 in 3 trades, maybe, right? So that's really important concept for you guys to understand, is trade management will make all the difference, all right? It's a lot better when you lose 1/3 or half a position or go break even than taking a full loss, okay? Let's have a look at natural gas. Natural gas is an interesting one. Now, natural gas, you guys might not trade it, but it's the same theory that I want you guys to understand of how my brain is operating, okay? If we look at natural gas on a weekly time frame, we're coming up into a very clear weekly supply area of like supply / resistance, good area that we might see natural gas sell off from, okay? This is like yearly highs too, 1.5 year highs to be exact, coming back up into daily supply, okay? And we had a nice little confirmation. Prices rallied up, higher high, higher low. This is what I would like to see. Structure being removed, pivot point zones being removed, momentum lines being broken. And I think selling this straight up is a valid trade, okay, with a stop above there. Now, it did gap up. I think that this gap will potentially pull back, but I think it will take a lot longer too, because this is a 6.5% gap to the upside, 7.5, right? In fact, like now for it to fully retrace, it'd be like 8% for it open to the close for this thing to pull back to. That's a very large gap. I think as of now, I wouldn't just, if I don't trade natural gas, but if I was, the way that I would play this is I would probably have a sell limit, a sell stop right here. And once it breaks this candlestick, I would be looking at entering a short on the sell stop rather than just pushing sell right now, right? And then having my stop, maybe up here or right here. I would honestly probably have it like right there and take a smaller risk trade. Keep in mind, a trade like this, reward to risk would be like 74. It's a 3-to-1 reward to risk. So, chances of this playing out is probably like a 38% chance. So you're going to have a lot more losers than winners if you were to take this straight up, which is fine. You know, some people like doing that, but that is how I would be entering a short like that because it gapped up into my zone. Okay. Cotton, interesting one. We had some good buy setups down in here, but prices just never pulled back into. But right now we're coming back up into this area of supply. I like this. If I was scalping, it doesn't matter the time frame sequence. So if you're looking at like 1 hour time frames, yeah, I would be looking at selling opportunities. It's in an uptrend, but you're selling this as a corrective move, right? So smaller risk, quicker trade management, quicker TP, right? Trade management in general consists of, you know, the overall type of entry, how aggressive it is, when you move your stop loss, when you take profit, stuff like that. So I like it for selling opportunities. I just don't see anything really yet for selling in. I think if we get a pullback, I wouldn't expect prices to go past this level here because this is a very strong pivot point, move to the upside. So without this level creating some type of problems to this move to the downside, I'd see this level holding for a bit. Let's look at coffee, and then honestly, let's look at the currencies. I don't think you guys really look at coffee, but coffee is coming back up to previous all-time high levels, right? On like a monthly chart, up into here, back in 2011 is the last time coffee was this high. So we're coming up into territories in coffee where like long-term shorts make a lot of sense on a coffee. So if I was long-term position trading, swing trading, this is an area that I would start looking at, you know, entering shorts. It's a very long-term range. This is a range that's been holding since 1977. All right. Honestly, you want to go back 1975. Crazy. The bottom of the range and the top of the range. So yeah, it's a valid area to start looking for those shorts. And if I wanted to play the super long-term game and you want to play a high reward to risk, honestly, you place a stop at the 400 territory and you just enter short. I think it's not a bad short, to be honest, to at least play to 200 and you make a nice little profit, not going to lie. That's like you're playing that as like a yearly, two-year long-term position trade. I honestly kind of like that. That is a pretty good short. And do I really want to hold coffee for 2 years? I mean, it's money, but that's a tough one. I don't like doing that. But different time frame sequences, same thought process, right? Same thought process. So if I was looking at like swing trading, I want to be looking at monthly or weekly time frame as my highest time frame. And then I'm looking at like a 1 hour, 4 hour, or a daily as my entry time frame, right? That's what I'd be looking at for swing trades. Let's have a look at some of these currencies. So the dollar, before we get into some of those minors, let's have a look at the dollar. The dollar is really interesting right now because if we look at the monthly time frame, weekly, it's been very strong, all right? But this is also the strongest week that we've had as in closing since November 2022. So in the last 2 years, this is the strongest this is the strongest the dollar has been as in price has closed since 2022. We haven't been in this territory since 2022 and we closed up into this area at the top of the range. This is an area that's been on my watch list for a long time of when we might see sellers trying to step in for the next couple of months on the dollar. Okay, so I'm going to remain bullish on this dollar. I think it's what's really strong. It's what everybody's talking about. It's the strongest currency. It's a heck of a move. I think a healthy pullback is necessary in the dollar, but it could continue to go up. But hey, I do like it for those selling opportunities for like long-term positions. I just haven't seen the COT reports. Keep an eye on the COT reports. A good guy I recommend following is Trading White Oak. He's a guy on YouTube. I've done a couple collaborations. If you want to learn how to do COT reports and read them, I will have a link below of the collaboration I did with him for more of like a long-term position swing trading type of approach, looking at the dollar. If you decide to check him out, tell him I sent you. I said hi. So when I look at this on the dollar, yeah, it's very strong over the last 2 months. Very strong. If we are going to be looking at shorting this thing, I got to see those COT reports selling off, and I haven't seen them adding into positions into shorting the dollar Okay, they haven't done that yet. They just remain buying the dollar while keeping their shorts the same. So until they start selling to take profits and adding to their shorts, I'm going to remain bullish. But hey, I think it's a good area for, continuing to be looking for day trade longs. That's the way that I like it. I think you're currently pulling back into this overall structured pivot area of where it previously pushed up from. Okay. If we look on smaller time frames, the areas that I did like was, since then we have removed it. I did like that area for buying opportunities, but I also like this area for buying opportunities as well for buying opportunities. But the way that I'd be playing this on a smaller time frame is a 5-minute time frame. And I want to see this thing break structure. I see this as in we've broken this momentum line. We're starting to remove the zones, but we aren't having a strong imbalance yet. I think we're slowly just kind of dying out. We've gone down, we've broken it, but we haven't done anything. So the way that I'd be playing this for the day is I want to see a move to the upside that's in a strong fashion. I don't want to see prices grinding out like this. There's a difference between what these zones are accomplishing when they go like this versus like this. And we've gone through several examples already today, right? That S&P that we started talking about, the gold level that we talked about. What did these zones accomplish with the imbalance, right? It's everything to supply and demand traders, okay? If I'm going to buy this reversal, this is really what I'd be keeping an eye out for. I want to see this thing pop to the upside. Ideally, I want to see it break above this area. Ideally, close would be even better if we could break above this area, because this whole gap I see getting filled, okay? But I need to see this thing have a very strong move first. And the way that I would play this is, if that happened, theoretically speaking, if we get that move to the upside, if this, I don't trade the dollar or anything like that, but if this was like gold or something like that, or the S&P, this is how I would be playing this. I would wait for that to happen. I would buy the pullback. With my stop, there's 2 stop losses, either one down here or one here. I think there's one aggressive stop loss here, or the more conservative stop down in here, right? That way, if you lose, it's the aggressive stop. Prices could go here, but could still rally up. But if you're wrong on this one, prices are probably going to go a lot further down. So that's why I prefer having a wider stop, right? Keep in mind, you can always add into these winning trades as it's going in your favor, okay? I think that's really important for traders to understand, is adding into your winning trades. I think that's a video that I should make for you guys, is, trade management, adding into your winners, when to cut your losers early, right? It's a massive part of a trader's success, right? I think it is what defines the trader from just being break even and really profitable, or slightly break even and being really profitable, is trade management, right? Adding to your winners or adding to your losers, knowing when to add to your losers, knowing when to get out of your trade completely, knowing when to move your stop up, knowing when to just cancel the trade altogether, because we don't want to just be full mechanical, being like, oh, this is a valid setup, I need to take it. No, there's market conditions. Like, you got to consider these market conditions. The market conditions are always changing, and you have to adapt with your trading strategy to the current conditions of what's happening, okay? So when I look at this, say we get long, stop either down there or down here. I would lean towards the wider stop. But if prices start going like this, and probably going like this, failing to really buy or step in and go lower, I'm probably just going to cancel the trade. That's not what I want to see, right? I'll cancel the trade. I'll take a small loss. But if prices eventually just pop to the upside, hey, I'll get re-long. I'll enter this long again. I'll take a small loss, but I don't want to take a full loss, right? I'll get long again. I'll just re-enter this. It's not a problem, right? It's okay. It's okay, ladies and gentlemen. Everything's going to be all right. Shout out Bob Marley. So let's go into this. That's how I would manage it if it just keeps going against me, right? If it starts going in my favor, okay, and say, for example, it's failing to break those highs, well, at that point, I'm probably going to move my stop up a bit, like there, right? If it's failing to break the highs and it starts going low, like, that's not something I probably really want to be in. But you know what? If I start seeing this thing rallying up and maybe we kind of go like this, I'll look at adding into that. I'll add into this position here, right? Maybe into something like that, or as it's making higher highs and higher lows, I'll find areas to buy in and then just move my stop up on my original position, okay? Managing risk, adding into my winners, right? Because I think if prices are gonna break above that area, I think it's going to fill that gap, but I don't wanna just hold a full loss if it decides to go against me, okay? That was a good talk on the dollar. This is changing every single day. This is what we do. As traders, we always have to adapt. So I want to go through some markets that you might not look at necessarily, but they're interesting markets to learn from about, why I'm looking for buys or sells at, okay? So if we look at New Zealand yen, long-term approach, 4-hour time frame, scroll out. The best thing that you can do as a trader is scroll out of your charts. Don't get so fixated on this. Get fixated on that, right? Right? You want to see the whole booty, okay? Don't know where I was going. I knew where I was going, but I got to keep it PG here. No. You want to see the full booty. You don't want to just see the pictures or one cheek. You want to see the full booty, right? All right, so hey, wide out, zoom out, booty, right? Long term, 4-hour. We are low on the range that has been holding since September, okay? If I'm a day trader, intraday trader, I'm going to be looking for long opportunities. We're holding this range. We're down low. I like it for long opportunities. I'm going to go down to like a 15-minute or a 30-minute and wait for confirmation. I don't see anything yet. See how it's range bound right now? We've gone lower low, lower high, lower low, lower high, right? We got that downward channel. Well, now we've got this sideways channel, right? Perfect. What I'm waiting for is prices to maybe do this. Break out, pull back. I am not waiting for this to occur. I'm not waiting for that. I want to see an actual break. What did this zone accomplish, right? I want to see something like that and buy the pullback. If that happens, aggressive stop maybe somewhere down in here, right? Aggressive stop maybe down in here, or have a wider stop and play this down here. You can always add into your winning positions, right? Add into your winning positions. You can always manage the trade, right? There's different pros and cons to this. Lately, over the last 2-3 months, I've been leaning towards quicker take profits and having wider stops, right? That's given me the ability to manage my trades a lot better, to take smaller losses, okay? And add into my winners. Versus if you're taking very quick entries to your exits, it's very difficult to do that unless you're actively right there and you're like scalping the crap out of it and you know how to read price and you know how to manage your emotions. But if you're doing this on a bigger picture, it's a lot easier, okay? So that's kind of what I'd be waiting for. CAD yen, same thing. Look at this on a higher time frame. Seems pretty bullish, okay? Now, I want to have a look at this. Daily time frame. Daily time frame. This is a pretty important level. Daily time frame, daily supply. Held once, twice, 3 times, 4 times, but each time it's going deeper into this, right? This is something I want you to know. This is how my brain is thinking. Okay, just missed, maybe tested, deeper, 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 right? It's going in deeper each push. Everybody likes it when it goes a little bit deeper. You know what I'm saying? So, anyways, okay. Valid area to be looking for shorts. I like it for shorts. Oh God, there's some cat outside whining. I am not a cat person. If you have cats, good for you, but I am definitely not a cat person. I actually heard if you have a cat and you die, it's actually common the cat will eat its owner to stay alive. But if you have a dog, nobody's feeding the dog will actually die next to you. It's common that the dog and the owner die together next to each other. The dog dies of starvation. Right? Maybe the person's been dead for a week or something like that by the time that they find the body. Anyways, I digress. Fun fact though. Let's continue. Whew. One minute we're talking about zones, the next minute we're talking about going deeper, and the next minute we're talking about cats and dogs. Like, what are we doing here? Okay. Yeah, hey, this thing's going deeper. I think it was valid for selling opportunities. You had some great selling opportunities on smaller time frames, okay? But I think you got that pressure to go to the upside. There's pressure to this thing to the upside. So I'm okay with knowing that this higher time frame might potentially break. So I actually might get long, all right? But I'm not just going to push buy. In fact, I want to go down to like a 1 hour or a 30 minute before I get long. And so let's go down to a 30 minute, and you can even see this thing. This thing's lower low, lower high, lower low, all right? Here, we actually started breaking above this previous area here. That's a pretty bullish sign. If you were short, do you think that's what you really want to see? Guys, if you were short from this 4 hour zone, do you really want to see your lower lows, lower highs being removed? No, right? You want to see lower lows and lower highs being created, okay? You don't want to see downward trend lines being broken, pivot point zones being removed. That's a pretty bullish sign, right? So if you were short, I would be cranking that stop down to break even at this point. You know what I mean? Because now buyers, we might be seeing the buyers trying to step in at this point. Okay, so we see buyers trying to step in. I would probably hold off. I wouldn't try buying that. I would want to see prices closing above. So notice how we have, let me turn off this filter. Notice how we have this lower low, right? Prices break above, okay? But we never really close. Ideally, I really want to see prices close. That just makes it a lot better, and it lets me know that prices actually accepted the imbalance. Buyers weren't really able to step in after it removed this area. Valid, but aggressive, okay? And if I was to buy it, I would probably buy that as my pullback with my stop below that area down here to the left, down below this area, right? Some people might have their stop down here. I think that's fine. I think that's fine. I would have it probably below this area down here. I think it's a pretty major area as well, having it as a structure stop. But either stop is fine. I would not have it right there. I personally wouldn't. There gives you no chance to manage these trades. No real chance. It's tough to add into these winning trades if you're trading this on a 15-minute time frame. It doesn't really give you a chance unless you use a very small time frame. So that's how I would do this. But the way that I'd be playing this now is I would be waiting for prices to break above and get long again. That's what I would be waiting for, because I see this downward channel happening, right? Oops. I see this downward channel, right? You guys see that, right? Now we're sideways, okay? Yeah, so if I see this thing breaking out, right, that's something I'd be looking at. I want to see something like that, breaking out, pull back, getting long. That's something I would be looking at. If it continues to sell off, then I wouldn't, I wouldn't be getting long. I would be, looking at short or no trade at all, okay? But that's how I'd be playing a market like this, okay? Swiss yen, it's basically the same thing. If we look at this, we're inside a really nice 4 hour zone here on a 4 hour time frame. Look at this, beautiful zone, beautiful, beautiful. Valid buy setup. We actually liked this as a buy setup a while ago, but it's taken too much time for prices to come back and it's gone too far. I don't really want to trade a 4 hour zone straight up that was created over, a month ago. Over a month ago on a 4 hour zone straight up. No, I would want to trade it, maximum a week to 2 weeks on a 4 hour zone, buying the whole thing straight up. We never got that pullback, so it's not something I would really be interested in. But I'll use it. I will use it as an area of interest to look for buying opportunities. Always start with your higher time frame, right? You always start with your higher time frame. So if I'm going to be looking at longs, I'm going to be waiting for this thing to, once again, break to the upside and show me a buy setup. So same thing. I see this thing going down. I want to see this thing breaking up, maybe a pullback. That's what I'd be waiting for. Probably smaller risk because this thing is downtrend, right? It's a very downtrendy market. You're trading counter trend, small risk, quicker trade management. If that's something you play, then great, right? It doesn't matter the market. If this was gold, okay, same thing, right? Or S&P or oil or whatever markets you trade at, okay? The market condition is important to understand. Don't just get so captivated on your overall technical approach, because you're going to have your winning streaks and your losing streaks, okay? And you need to be able to review to see when your strategy performs well and when it doesn't, okay? And so being aware of current market conditions is extremely important. Let's continue. This market, nothing too special. Aussie Swiss, let's skip it. This is a one, Aussie CAD. Long term, this is like a pretty bullish market. I see buyers potentially stepping in here. I think this would be valid. Trying to buy back into this area, buyers trying to step in. I think this is a valid area right here, right now. You know how we were talking about confirmation and stuff like that? I think you have that right here on a 30-minute time frame. It's going to be the more aggressive type of confirmation, and I'll talk about that in a minute. There's your zone. I think your stop, there's two stops. You either play the aggressive stop, as in here, or you play the wide stop down there, as in the overall structure zone, right? Both are fine, both are valid, I think. But the reason it's more aggressive is because when prices first originally came in all the way down here and it rallied up, this is like a smaller time frame, lower low, lower high confirmation, right? So if you have a market that's like, you know, rallying up, and then you have this short term like lower low, lower high in a smaller time frame, it's not the same as like a higher time frame confirmation. You know what I mean? So that would be still a buy setup in my books. I like it as an overall technical approach, but it's one of those that I would definitely do a smaller risk on if I ever traded this market, right? Same setup. I don't trade it. I'm not going to trade it. So I'm not advertising for you guys to take any of these setups or anything like that. I'm telling you, I'm showing you how my brain operates. I don't fully understand the market condition that this is in. I don't ever look at this pair, okay? But this is the technical view that I do like, but it's not the greatest because yes, long term, like scroll out, I like it, the area for buying opportunities, like it's a good area. We're looking for buying opportunities. It came in once already. Look, it's came in once, rallied up. It's coming in deeper twice, right? So it is more aggressive using that, but it still would be valid. Okay. And New Zealand CAD, it's the same setup. Honestly, it's the same setup, but it hasn't shown it yet. So if we go to the daily time frame, you scroll out, hey, you're in a good area for buying opportunities, I think, but you just have to wait for confirmation. And the problem with the dollar, this is a problem with a lot of these currencies right now. It's honestly, it's something we should have actually looked at. If we look at the dollar and we pop this to a line chart, I'm going to go like this. It's really important to compare currencies' performances. We're going to click on Swiss, the pound, the Japanese yen, the euro, the Aussie, New Zealand, Canadian. And we're going to compare over the last 30 days of the market, which currency has been performing very well and which has not, right? And this is why I remain bullish the dollar, right? Versus the other currencies, when you have the dollar going up and skyrocketing up, you're going to have every other currency going down. And so this is why you get a lot of range markets when you have the minors against one another, when you have Aussie yen, right? When you have pound CAD, when you have euro pound, you get very range bound markets, okay? Pound Aussie, you get range bound markets because it's two weak currencies going against one another. The only way for one to really break out is if one has very strong fundamental news coming out, okay? Or one is just theoretically a lot stronger. But compared to the dollar, it's getting demolished, right? So the dollar is king right now, and it's the king in all general markets. So that's why I remain bullish the dollar until we really start selling, until they start adding to their short positions, closing their longs. I'm going to remain bullish, and it's been my whole analysis for the last 2 months. But yeah, I think you have periods of time that you can scalp short the dollar for the day or for a couple hours or an hour. Yes, 100%, right? But long-term swing, I just don't think it's a wise idea, okay? So comparing these currencies against one another is important to know, hey, are you buying the weakest currency? Should you really be buying a swing long position in the weakest currency just off of a technical view of you buying a setup, trading counter trend, right? It's just not smart. This is when you have to understand market context a lot better, right? But this is how my brain is thinking as I'm going throughout the markets, and it can switch on a dime, right? I have setups all the time that I don't take every single day that are valid trade setups, but they don't fit the current market conditions or why I want to buy or sell. Trade management is always changing. This is why it's a lot of information being thrown at you, right? And so actually this week coming up for Black Friday, it's going to be a great time for you guys to join the Moneyball trading program. It will be a special offer. I'll talk more about that on Friday's video to have you part of the program, but that's what we try to do. We really try to, build consistently profitable traders over the course of 90 days or less. If you guys have any questions, let me know in the comments below. You can always reach out to me on social media at MoneyballAustin. I will see you guys later. Trade safe. Bye-bye.